Here's something most people over 65 don't realize: the government quietly set aside up to $6,000 just for you this tax season, and thousands of seniors are going to miss it simply because nobody told them it existed. If you've been filing the same way for years, trusting that your return is as good as it gets, this video might just change your mind, and save you real money before April 15th arrives. Stay with me, because what I'm about to share could be one of the most valuable things you watch all year. And if you find this helpful, go ahead and hit that like button, subscribe so you never miss tips like this one, and drop a comment below. I'd love to hear whether you knew about any of these. Now, let's get into it, because this isn't just about numbers on a form. This is about making sure that after a lifetime of working hard, paying into the system, and doing things the right way, you're not leaving your own money sitting on the table when tax season rolls around. Every year, millions of American seniors sit down in February or March, pull out their W-2s or Social Security statements, and file their taxes the exact same way they've done it for the past decade. And honestly, there's nothing wrong with that kind of consistency. It speaks to a generation that values reliability and doing things properly. But here's the quiet truth that not enough people are talking about: tax law changes. It changes more often than most of us realize, and when it does, the people who don't get updated information are almost always the ones who end up paying more than they should. So today, we're going to walk through 5 things every senior needs to know about the deductions available to them before the April 15, 2026 deadline, and we're going to do it in plain, straightforward language. No tax jargon, no confusing fine print. Just the kind of honest, helpful conversation you'd have with a trusted friend who happens to know a thing or two about taxes. Let's start with the most exciting piece of news, and honestly, the one that surprises people the most when they first hear it. There is a brand new $6,000 deduction created specifically for seniors. That's not a typo, and no, it's not some obscure loophole that only applies to a handful of people in unusual situations. Under a piece of legislation called the One Big Beautiful Bill Act, yes, that's really what it's called, eligible Americans who are 65 or older can now claim an additional deduction of up to $6,000 per person on their 2025 tax return. And if you're married and both of you qualify, that number doubles to $12,000 for a married couple filing jointly. Now, here's what makes this particularly noteworthy: this deduction can be claimed even if you itemize your deductions. Normally, when tax breaks come along, they tend to work one way or the other: either you itemize and claim certain expenses, or you take the standard deduction and skip the itemizing process entirely. But this new senior bonus is different. It sits alongside your other deductions rather than replacing them, which means it has the potential to benefit a wide range of seniors regardless of how they typically file. Think of it like finding an extra coupon in your wallet that you didn't know was there, and discovering it works on top of the sale price, not instead of it. Which brings us beautifully to the second thing you need to know, and this one is genuinely exciting once you see how the numbers add up. Qualifying seniors can actually stack 3 separate deductions together. And when you line them all up side by side, the total is nothing short of impressive. Here's how it works. First, there's the base standard deduction, the one most people are familiar with. For the 2025 tax year, that's $15,750 for single filers and $31,500 for married couples filing jointly. That right there is already a substantial amount that reduces your taxable income before you even get started. But then there's a second layer. Seniors 65 and older have long been eligible for what's called an extra standard deduction, an additional amount on top of the base. For single filers, that's an extra $2,000. For married couples, it's $1,600 per qualifying spouse. This has been around for a while, and many seniors already benefit from it, though not everyone realizes it's separate from the standard deduction. And then, sitting right on top of all of that, is the brand new $6,000 senior bonus we just talked about. So let's do the math together, because this is where it gets really satisfying. A single filer who is 65 or older could potentially combine $15,750 plus $2,000 plus $6,000, arriving at a total potential deduction of $23,750. That's nearly $24,000 of income that could be shielded from federal taxes. For a married couple where both spouses qualify, the numbers climb even higher. Now I know some of you are sitting there thinking, that sounds almost too good to be true. And I understand that instinct completely, because we've all been burned before by things that sounded better than they turned out to be. But these are real, verifiable numbers written into current tax law. The key, as with all things tax-related, is understanding the rules around eligibility, and that's exactly what we're going to cover next. The third thing you need to know is that the new $6,000 bonus comes with income limits, and understanding them could determine whether you qualify for the full amount, a partial amount, or none at all. Here's the honest picture. If your modified adjusted gross income, which is essentially your total income with a few specific adjustments, falls below $75,000 as a single filer, or below $150,000 as a married couple filing jointly, you are eligible for the full $6,000 deduction per person. That's the sweet spot, and a large number of retired seniors will fall comfortably within those thresholds. However, if your income is higher than those limits, the deduction begins to phase out gradually. And if your income exceeds $175,000 as a single filer, or $250,000 as a married couple, the new senior bonus disappears entirely. Now, before anyone feels discouraged by those upper limits, let's put this in perspective. The vast majority of Americans over 65 are living on incomes well within the qualifying range. Social Security, a modest pension, perhaps some investment income, for most seniors, these sources of income don't typically push them past those thresholds. But it's absolutely worth calculating your own numbers carefully, or having a tax professional take a look, because every situation is different. And speaking of taking a closer look, this leads directly into the fourth thing every senior needs to know before April 15th, and it might just be the most important practical detail of everything we've discussed. Claiming the new $6,000 deduction is not automatic. You have to fill out a specific form to get it. This point cannot be emphasized strongly enough. There is a new form, Schedule 1A, attached to your Form 1040, that must be completed in order to claim the senior bonus deduction. It does not appear automatically. Your tax software won't necessarily prompt you for it if you're using an older version or if you just click through quickly. And if you're working with a tax preparer who isn't up to date on the latest changes, there's a real possibility it could be missed entirely. Tax experts who have been following this legislation are already warning that this is going to be one of the most commonly overlooked deductions this filing season. And the reason is simple: seniors who have been filing simple, straightforward returns for years, perhaps just entering their Social Security income and taking the standard deduction, may not realize there's a new step involved. They'll file, get their refund or pay their bill, and never know they left thousands of dollars unclaimed. So if you take away only one action item from everything we've covered today, let it be this: ask specifically about Schedule 1A before you finalize your return. Whether you're filing on your own, using software, or working with a preparer, make sure someone has looked at that form and confirmed whether you qualify. A 5-minute conversation could be worth thousands of dollars. And finally, the fifth thing you need to know before April 15th involves the specific eligibility requirements that determine whether you can access any of these benefits at all. Let's go through them clearly and gently, because these details matter and they're not complicated, they just need to be said plainly. First, the age requirement. To qualify for the senior deductions, both the long-standing extra standard deduction and the new $6,000 bonus, you must be 65 years of age or older by the end of the 2025 tax year. In practical terms, that means you need to have been born on or before January 2, 1961. If your 65th birthday falls in early 2026, unfortunately you won't qualify for this particular filing, but your time is coming. Second, your filing status matters more than you might think. One of the lesser-known restrictions on the new $6,000 senior bonus is that it cannot be claimed by anyone using the married filing separately status. If you and your spouse file separate returns, which some couples do for various legitimate financial reasons, this particular deduction is off the table for both of you. If you're currently filing separately and you're not sure why, it may be worth revisiting that decision with a tax professional, because the cost of separate filing just went up considerably this year. And third, documentation. To claim the new deduction, you must have a work-authorized Social Security number that was issued before the due date of your tax return. For the vast majority of seniors watching this, that condition is simply a non-issue. You've had your Social Security number for decades. But it's a formal requirement, and it's worth knowing it exists. These eligibility rules aren't designed to trip you up. They're just the guardrails the legislation put in place to ensure the benefit reaches the people it was intended for, seniors who have spent their lives contributing to this country and who deserve every dollar of relief that's available to them. And as we wrap up the main body of today's discussion, I want to take a moment to step back from the numbers and the forms and just say something that I think is worth hearing. Tax season can feel overwhelming. It can feel like a maze built by people who don't want you to find your way through it. But the truth is, the information is out there, and you deserve to have it explained in a way that actually makes sense. What we've covered today represents a genuinely meaningful opportunity for seniors filing their 2025 return before April 15th. A new $6,000 deduction, the ability to stack multiple benefits together, income thresholds that most seniors will comfortably qualify within, a specific form that must be filed to claim it, and clear eligibility rules that most of you watching will easily meet. That's not a small thing. That's potentially thousands of dollars staying in your pocket instead of going elsewhere. In just a moment, we're going to bring everything together in a clean, memorable summary, and I'll share a few final thoughts on the best next steps you can take right now to make sure you don't miss out on a single dollar you're entitled to. So don't go anywhere, because the conclusion of this video is where it all comes together.